Reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Alpesh Mehta from IIFL Securities Limited. Thank you, and over to you, sir.
Thank you, Lizanne, and I welcome all of you to the Ujjivan Small Finance Bank 1Q FY23 digital conference call. From the management side, we have Mr. Itira Davis, MD and CEO, Ms. Carol Furtado, Chief Business Officer, Mr. MD Ramesh Murthy, CFO, Mr. Martin P.S., Chief Operating Officer, Mr. Ashish Goel, Chief Credit Officer, Mr. Vipas Chandra, Head Micro Banking, and Deepak, who heads the Financial Planning and Investor Relations. Now, without much ado, I hand it over to Mr. Davis for the opening comments, and post which we will have a Q&A session. Thank you, and over to you, sir.
Thank you, Alpesh. Good evening, everyone. I am delighted to welcome you to our Q1FY23 earnings call. Hope all of you are keeping safe. It's been more than 9 months since we started on our recovery path with a fourfold objective of strengthening the leadership team, growing business volumes, increasing collections, and improving asset quality. We are pleased with the outcome of our efforts on all 4 counts. We stabilized our business in Q3, turned around in Q4, and this quarter marks growth and profitability. Q1 business volume kept pace with a mammoth fourth quarter, both in terms of assets and deposits. On the deposit side, we focused more on growing granular retail base and also curtailing the overall cost of funds. On the asset quality side, we have maintained the traction as collections are inching up, with slippages being under control. Recoveries and upgrades are helping us reduce our PAR and GNPA every quarter, in fact, every month. We have already taken the provisions up front and thus do not expect major credit quality challenges this year. As of June 22, our NNPA is just at rupees 18 crore or 0.1%. Also, our SMA book as well as restructured book have shrunk further, indicating the reduced stress. The outcome of all this put together is the highest ever quarterly profit for Ujjivan, which is more than 203 crores on the back of a strong PPOP of 271 crores and a negligible credit cost. We are maintaining healthy CRAR of 20%. This quarter, we have considered rupees 30 crores for floating provision as part of Tier 2 capital and 220 crores for netting off from gross GNPA. The entire floating provision continues to be on the books and can be utilized in the future for making specific provisions in extraordinary circumstances, with, of course, prior approval from the RBI. Including 250 crore of floating provision, total provision of gross advances are at rupees 1,290 crores. Now we have achieved the objectives we started out with. We have put our sight on growing the platform further. This year we would look to restart expanding our physical presence across the country, though we look to make a modest beginning with around 25 branches, largely focused on the liability-rich catchment areas. Physical reach would be supplemented by a strong and focused investment in digital platforms to grow our business volumes, both assets and liabilities, services to improve processes, and the overall reach to our customers. Our focus this year is to consolidate our business and make them profitable, invest in new avenues of growth. Our economy is recovering. The credit demand has picked up. This is evident from our performance over the last 3 quarters. We look to grow our gross advances by around 30% this year, with deposits growing faster than advances. We are monitoring our costs very closely and aim to bring in efficiency through process improvement and productivity enhancement. We look to hold our cost-to-income ratio at the current levels. Credit costs, we have already guided, would be contained well below 1%, as the declining trend in NPA and PAR would continue for the balance of the financial year 23. Return on assets should be north of 2.3%. The risk to this guidance is the inflationary pressure that's brewing up in the economy and the resultant rate hike movements. Also, we are monitoring the global geopolitical scenario. Overall, I see financial year 23 as a strong comeback year for Ujjivan, which would create a solid platform for the next growth cycle. I will like to stop here and request the operator to begin with the question and answers.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Vivek Ramakrishnan from DSP Mutual Fund. Please go ahead.
Good evening, and I'm glad to note the optimistic tone. I just touched upon the issue that you raised of inflation and the two-pronged recovery, especially in the micro banking segment of your customers. How is the restructured book doing? I know the customers cannot make more than one EMIs typically. So do you expect recoveries from this book with a lag, or are the customers still feeling a lot of pain? That's my only question. Thank you.
Yeah, hi, Ashish here. On the restructured book, let me answer that question first. We, under the Resolution Framework 2.0, which was the May 5th guideline, May 5th, 2021 guideline, we had restructured about 944 crore in the micro banking book and a small amount in the housing and the MSE book. Out of the 945 crores, we have already recovered 580 crores from the customers. In fact, almost 1.6 lakh customers have also closed their accounts. And we currently have an outstanding of about 360 crores on the RF2 book. And we continue to collect from there. In fact, what we have seen is that post-restructuring and the moratorium that we had given for about 3 months, and immediately post the lockdown, customers had indeed started paying very well. And our collection efficiency in the restructured book continues to be above 80%. The current quarter we have ended at about 79%. So this trend has continued. In fact, out of the 360 odd crores, we have 148 crore in NPA, which is fully provided. So we don't see any incremental risk in this portfolio. In fact, we see that the portfolio will do even better as we go into the remaining part of the year. Because our paying customers are actually paying at a very healthy rate of 80%.
Sir, if I can just dwell on the NPA part, are they also, is it because they're just, more than 3 months use, is it more accounting, or are the customers, do you feel that they're going to be more written off and they're not going to come back as paying customers?
On the NPA portion, we have seen that about 30% of our customers are paying on a month-to-month basis. The only thing that they are not, the only problem is they are not able to recover the past EMIs and the arrears which have got built up over a period of time. So even on the NPA portfolio, we are not saying that we will write off. There will be a small portion of write-off which may happen. However, as I was saying, 30% of our NPA customers are paying month on month. So we don't see, write-offs happening in that segment.
Excellent, sir. Good to know, and wish you all the best.
Vivek, also one more thing, given that what Ashish mentioned, NPA is quite high in that 360, but the overall collection efficiency is 80%, which means even the NPA customers are paying. They are NPA because 3 month overdue is there, and then they are paying one EMI at a time. So it's not that that entire amount, whatever is NPA and anywhere 100% provided for, will be written off, or there is any, which is why we believe there is no pressure on that book.
Okay. Thank you so much. Thanks for the clarification. Thank you.
Thank you. The next question is from the line of Shripal Doshi from Equirus. Please go ahead.
Hello, sir. Good evening. Thank you for giving me the opportunity. So firstly, on the microfinance side, our ticket size has gone up significantly in the last 2 quarters to almost 56,000 now. So could you please throw some color as to what would be the reason behind the same? And in the MFI segment, are we continuing to focus on the urban side only, or are we also exploring of increasing our share in the rural side?
Hi, thank you for the question. As we mentioned in the last quarterly call also, that our ticket size went up mostly because of, after the lockdown, we mostly focus on repeat loans, the customers who were paying during the pandemic period, and we were not able to provide them repeat loans. As you know, that in microfinance and repeat loan, the ticket size is on the higher side. So first 2 quarters went on, serving the customers who were, we were not able to serve during lockdown. And as we have moved in the Q1 and, we have already served the pending customers, we have moved our focus to new customer acquisition as well. If you compare from the last quarter NCA was, new customer acquisition was close to 24%, which is now close to 32% this quarter. So our focus has changed, and in NCA the ticket size is on the lower side, which actually has resulted into lower ticket size, average ticket size in the last quarter, Q1 of this year. So that is one thing. And second, as you mentioned that whether we are focusing on urban only. So as after conversion to bank, we have also opened branches in bank rural location, URC location, which is 25% of bank presence, and we have started focusing on rural areas as well. And we have not only microfinance product we are selling there, we are selling other products also which is relevant and logical to the rural market. And apart from market, we also sell liability product in these branches. So our focus is both in urban as well as rural.
Just one follow-up there. So what would be the ticket size bracket for our more than, say, 5-year vintage customer that we would be having?
It varies. We go up to 1 lakh for repeat loans after the 3rd or 4th cycle. And, the average ticket size is close to, for the repeat ticket size is close to 68,000. But, the range is from, say, 50,000 to 1 lakh.
What is the maximum that we give to a group loan customer?
1 lakh is the max in group loan.
Okay, got it. So on the question was on the housing side. So that's another segment where we are seeing strong growth. So there the ticket size is 1.2 million. And so if you could just give some color as to which geographies are we targeting, or is it present, or is the product available at all the branches, and what is the strategy going ahead with respect to the share in the overall loan book mix?
Hi, this is Carol. On the housing side, our focus has now moved a little bit from the informal to semi-formal and the formal segments. And what we have also done is that we have got into state-wise policies, which is helping us get better results there. And so informal is very low as a percentage, but we are focusing on the semi-formal and the formal segments.
Got it. And then geography-wise, we would be broadly doing business in all our states, or like heavy?
Geography-wise, we are focusing mainly on the semi-urban areas.
Okay. Got it. Ma'am, just some few data keeping questions. So on the NPA side, so if you could give us the slippage, recovery, upgrade and write-off number for the quarter.
156 crores, right? The upgrades was 215, and we did write-off of about 63 crores.
That's the technical write-off. The total write-off is around 79 crores.
Slippage number, I think I missed that number.
156.
Okay. Thank you, sir. One last question on the provisioning side. So what is the provision that we are having on the restructured NPA book?
On the restructured book, we have, on the NPA side, we have about 148 crore of NPA in RF2, on which we are holding full provision. And in RF1, we have about 130 odd crores of NPA, again, on which we are holding full provision.
Basically, we are having 100% coverage on the restructured NPA bucket.
That is right.
Okay. Thank you, sir. Thank you so much for answering my questions, and good luck for the next quarter.
Thank you.
Thank you. Participants, in order to ensure that the management is able to address questions from all participants in this conference, we request you to limit your questions to 2 per participant only. The next question is from the line of Nidesh from Investec. Please go ahead.
Thanks for the opportunity, sir. 2 questions. First, if you can share the number of customers in group loans and individual loans in the micro banking at the end of June 22. That would be the first data point question. And secondly, if you look at the segment-wise collection trends, we have seen sharp improvement in collections in micro banking. But in MSC and affordable housing, our collection trends have not improved. They have remained at around 95% for the housing, and I think 84-85% for MSC. So what are the reasons behind that?
Okay, I'll take the question on the collection trends. Now, the collection that we see is a blend of non-delinquent and NPA collections. So in secured book, which is the MSC book, we have a elevated NPA as of now. It is in the range of 10%. So therefore, our overall blended collection is in the range of 85%. Although we have seen some significant improvement in upgrades in the MSC portfolio also, there is a quarter-on-quarter decline in the gross NPA there. And on the housing side, the collection continues to be in the range of 95% and above. Again, our reflection of a much lower GNPA in the housing book. On the non-delinquent portfolio, we continue to have a collection efficiency of more than 95% in both the products.
And also just a follow-up on this, if I look at additional collection, additional collection is as high as the collection that we are doing against the due for month for MSC and affordable housing. Does it indicate the balance transfer happening in this portfolio? How should we look at the additional collection which are happening on MSC and affordable, which are particularly high?
Which is happening, Nidesh. Take that there's a whatever NPA, out of NPA, whatever collection we are getting and all that. Like Ashish mentioned, there's good amount of upgrade that happened in the MSC also. So that amount was totally roughly around 40 odd crore for this quarter.
Okay, sure. And just the first question on number of customers in group and
we don't share segment-wise, product-wise numbers, so we can't share
number of customers.
We don't share that.
Well, I was just looking at the loan outstanding per customer, loan size in group loans specifically, because ticket size I'm assuming is based on disbursement that we have done in this quarter. So I was more interested in looking at the loan size outstanding. That's why I was asking that number. So if you can just share that number with the loan outstanding per customer only in group loans, that would be useful.
So at any point in time, we would have, repeat as well as new customers coming into the bank. And as Vibhas was sharing that there is a repeat loan which is in the range of 63,000 and new loans in the range of 44,000. And the blended average of, both the loans put together is in the range of 55,000-56,000. Now, in terms of the average ticket size, these are short tenor loans. About 22 months is the average tenor. So typically the loan outstanding per customer should be in the range of 30,000-35,000. Okay. Because they would have amortized by about 50% in the last 6 to 9 months.
Sure. That's it from my side.
Thank you. The next question is from the line of Deepak Poddar from Sapphire Capital. Please go ahead.
Hello. Hi, Deepak.
Yeah. Hello, sir, and congratulations for a good set of numbers.
Thank you.
And sir, I just wanted to understand now. I think you spoke about cost to income holding at current level with good growth, as well as the credit cost well below 1%. But why we are still guiding for ROA of 2.3% plus? As compared to this quarter, I think it was about 3.4%. So is that a conservative kind of outlook that we have given on ROA front?
Deepak, we are baking in, like Mr. Davis mentioned in his remarks, we are baking in a little bit of inflationary pressure and cost hike on the repo rate hike and cost of fund hike and all that. That's why we are keeping that as a little conservative side.
Okay, yeah. So that's a little conservative number. But we do expect our NIMs to what sort of outlook we have on NIMs actually?
So overall yield should be improving even if we do not take any kind of a rate hike on our lending rate. Yield should continue to improve as the NPA goes down, and we expect the declining trend on the NPA and PAR to continue. With that, even if the cost of fund is stable, the NIM should be stable or upward trajectory. But we take that plus or minus as a stable NIM for the year.
Oh, that's great. And my second query is on your cost to income over next 2 to 3 years. So I think earlier we were kind of targeting 50% kind of a cost to income on a little medium term basis. So any thoughts on that would be helpful.
So I would put it like this: for 50% is the first milestone that we want to achieve within a short term, and then the journey should continue beyond that.
Is a first milestone, and what's the timeline we are looking at?
Short term milestone that we put at.
Short term, maybe 2 years, maybe something like that.
I don't want to put a year to that.
Okay. Right. Fair enough. Okay, sir. That's it from my side. All the very best. Yeah.
Thank you.
Thank you. The next question is from the line of Ramesh Bua from ICICI Securities. Please go ahead.
Yeah, hi sir, and congrats on a great set of numbers. So first question is on the this new MFI regulation in terms of the process alignment. So sir, where do we stand currently in terms of the process migration as per the new regulation?
Yeah, thank you very much for this question. You know that the new MFI regulation came into force on 1st of April, and very recently, yesterday only, we have also published traffic rules that clarifies that implementation date is 1st of October. This regulation came into force and communication came in the month of March. Fortunately, most of the items which were mentioned in RBI policy, we were already following it for the last 10 years. So it is just a confirmation of whatever we are doing for the last 10 years is something RBI also wants others to follow. There are some items which needs time. For example, the check rate bureau of customer household. There are some changes that need to happen at trade bureau end also. For that, RBI has allowed us time till 1st of October. And apart from that, we didn't face any issue in the month of April. We were normally able to do business in the month of April as well, which is a good thing that has happened to us. Whatever we have done over a period of time in microfinance business, as we are very old players in microfinance business, that has helped us in following the RBI regulations. And we are online with the pending items which need to be delivered. Where the timeline is 1st of October. Hopefully, we'll be able to do that well within a timeline.
Got it. So just to follow up on this, so on this 50% FIR, have we seen high rejection rate once we have implemented the new process?
No, in fact, our rejection rates in Q4 and Q1 have been exactly the same.
Okay.
There has been no uptick in rejection rates. In fact, we were also thinking what would the rejection rates look like post the FOIR implementation, but we found that the rejection rates have not gone up, nor have they gone down. They have remained to be the same.
And perhaps the reason is that, as I mentioned, that we are following most of the items which were prescribed by RBI for a very long period of time. So we were already following this process and rejection. were based on customer income and their dispensable income. That has led to now a situation where our rejection rate has not gone up based on the calculation.
Got it. And so, second sort of question is kind of repeating. So on the MSE and the affordable housing piece, even if you look at the gross NPA number and PAR 0 number, PAR 0 appears to be on the higher side. So, I mean, in terms of the process, what we have changed, let's say during COVID, to make sure that the incremental growth in both the segments, should be of a better quality than what we have seen during COVID?
Okay, so I'll answer this question in two parts. One, what was the portfolio composition when COVID-2 happened, and therefore what was the reason for the increase in GNPA? So when COVID-2 happened, most of our portfolio, and about 58 to 60% of our portfolio was from the informal segment, which got hit very hard due to the due to income related reasons. So people were not earning that income due to the lockdown. So that led to a very sharp increase in the GNPAs. During the same time, we also started to recalibrate our strategy, started planning for a shift in our customer segment from informal to semi-formal and formal. And during the last 1 year, we've made significant progress. In fact, on MSE, we had a 8% formal segment. We are now at 22%. And the incremental disbursements on a quarter-on-quarter basis has been 48% in the formal segment. So therefore, the change of composition of the book has been very significant in the last 1 year. So if you were to ask me about the delinquencies we have seen in the last 24 months, the GNP is less than 0.5%.
Okay. This is for the MSE business, right?
That's right.
Okay.
On affordable housing, if you were to ask me about our change of strategy, we have, in the last 4 quarters, done significant work on our salaried segment. So the salaried segment pre-COVID used to be in the range of about 38%, which is now almost 47% of the book. And our quarter-on-quarter disbursements are almost 54 to 55% on the salaried segment. Therefore, the book composition has also changed, and therefore the risk composition has also changed in the entire portfolio. Again, I would want to say that in the last 24 months, the book that we have disbursed has GNP of less than 0.5% in the housing portfolio as well.
Okay. And so just last data point, again on the MFI book. So if you can, let's say, highlight the number of borrowers who are unique to us, and maybe the borrowers having +1 lender.
Okay, on the unique segment, we have almost 35% of the customers that we have are unique to Ujjivan, and 65% of the customers have multiple borrowing arrangements.
Sorry, 35 is unique and 55 is?
65 is 65% customers have unique borrowing arrangements. Sorry, multiple borrowing arrangements.
And would you like to highlight, let's say, Ujjivan +1 lender, if you have that data with you?
I would not have.
Okay.
It would be there +1 or +2. It can't be more than that.
Got it. Okay. That's it from my side, sir. Thank you very much.
Thank you so much.
Thank you. The next question is from the line of Gautam from GCG Financial. Please go ahead.
Good evening, sir. Many congratulations for very impressive numbers.
Thank you, Gautam.
Yeah, my question is related to your growth expansion plan. Since you have stabilized and now you started growing, can you throw some light on your branch expansion plan going forward?
Gautam, in which regard do you want the expansion? Is it branches or is it book? What's the focus?
Branch expansion.
The branches, yeah. This our strategy is both brick and mortar and digital. So we will grow the branches in areas where we think it's good to be there. For example, this year we will be entering Telangana. We have not been in Andhra and Telangana, so this is an area for us which we need to look at. So we are entering Telangana this year. But we will continue to grow the branch network as required. But we are trying to push more in growing business through the digital route.
Okay. And second question pertaining to deposit. The deposit growth was very slow in this quarter. I think sequentially we have added only 156 crore. So my question is, what is our strategy to grow deposit in line with our loan growth, and what steps we are taking to raise the deposit in a upward interest rate market?
Yeah, see, the thing is that it's important that we have a granular retail growth, because that is the type of deposits we would like to have long term as against bulk deposits. So that is the focus. We have got our branches now working full gear to increase the deposit base, and we are also looking at different segments in that, including government and local municipalities and all of that. So we have got a very good strategy in place, and I think the coming quarters will show the growth on that front.
Can we raise the deposit rates?
Sorry?
Have we raised the deposit rates recently?
Yeah, we raised the deposit rates after RBI changed the repo rates by 50 and then 40 basis points. So we have made a slight adjustment in the deposit rates.
Okay. And last question is on since microfinance industry is doing very good post-COVID, and we are doing I think one of the best among industry. I would like to hear your qualitative comments on overall collection and how long this industry will continue to do like this. And is there any change in competitive landscape? Pre-COVID and post-COVID, any small player left the ground, or just your comments on that?
So, thank you for the question. What we see, we have gone through, microfinance industry has gone through various crises. This is one of them. Before that, we have also seen demonetization and other crises. And what we have seen that after each crisis, the customer segment that we serve in microfinance is, we have seen that they bounce back very quickly. And at the same time, at industry level, we have also seen that after any crisis, there are a lot of consolidation that happens, especially among the institutions who are weaker. We see a lot of opportunity going forward after this crisis in terms of customer acquisition and market share. And we are all set as a microfinance lender. We don't only lend group loans. We have full basket of product that we offer to customers, not only in asset but also in liabilities. And thankfully, we have also done a lot of activity around digital for these customers. So we are seeing sometimes very, very positive. And in terms of growth in microfinance, we see coming sometime very, very positive for microfinance growth in Ujjivan.
And to add to that, I can say that to the microfinance customer base, we will be looking at adding some of the secured products as well. So we see this as a good base for us.
Okay. Thank you so much, and all the best for the future.
Thank you.
Thank you. The next question is on the line of VP Rajesh from Banyan Capital Advisors LLP. Please go ahead.
Hi. Thanks for the opportunity, and congratulations on very good set of results. My first question was regarding the restructured book. If you can give a little more color on the customer behavior as to how some of them are able to repay. Is it that their businesses have rebounded, or they are able to borrow from other banks or NBFCs or something else? That will be just helpful.
So on the, I would not like to see the restructured book as behaving any differently from our overall book. When there was a lockdown, there was a need for customers who had lost their income to get some kind of relief from the bank, and therefore we had done the restructuring under RF 2.0. Post the lockdown opened, we saw that customers' incomes had come back to normalcy, and therefore we started seeing some very repayment rates from the overall book as well as from the restructured book. So I would say that the restructured book has not behaved very differently from the overall book because the customer segment was the same and the incomes had got back to normal. So therefore, I would say that restructured book has behaved very well for us, and it was indeed the set of customers who were looking for some kind of relief had been given relief.
Right, but if they are lagging in their payments and they have prior EMIs, obviously they will have to have extra money or extra funds to pay that back. And where is that coming from, if you have any sense on that?
I'm sorry, there was a little bit of disturbance in the line. Could you please repeat the question?
Sure. Is it better now?
Yeah.
So what I was saying is that when the book was restructured, they probably would have prior EMIs that were unpaid at that point in time. So as their businesses are coming back, are they coming back that strong that they can clear all the past dues as well very quickly? I mean, I'm just trying to get a sense whether they are borrowing more from other institutions to clear their dues with you, or some informal sources, or it's just that their business have come back very, very strong.
So there are indeed, I would say that about 5 to 7% of the customers who went back into NPA because their incomes had not come back to normal. But we have not seen any behavior in the restructured book which is any different from the overall book. So as I was saying, the restructured book behaved quite well in spite of the first 3 or 4 months of setback which the customers had. And they have continued to pay their EMIs. In fact, as I was saying, from the 945 odd crores, we have collected 580 crores already. The overall book has come down to 360 crores now.
Wonderful. Okay, and my second question, any guidance on the fundraise?
Fundraise, okay.
So the fundraise, that enabling resolutions we have taken two, one on the equity side and one on the debt side. Both are enabling resolution, and we'll see as and when we want to get the funding from the market. Right now, we don't want to give any timeline to any of the activity.
Okay, all right. Thank you, and all the best.
We have a timeline of December, that by December we need to meet the SEBI requirement of minimum public shareholding. So we will meet the SEBI requirement.
Got it. Thank you.
Sorry, this is Ramesh Murthy. Apart from the equity side, which Deepak has covered, we're also looking to raise some sub-debt. But as Deepak has mentioned, we won't like to right now put a timeline to it, but it's very much on a radar and very much on our cards. And we have the enabling resolutions, as he has mentioned before.
Understood. Thank you so much. All the best.
Thank you.
Thank you. The next question is on the line of Harsh Shah from Dimensional Securities. Please go ahead.
Hi, this is Harsh here. So just wanted to understand the macro situation that is going on in the rural and semi-urban side, because we hear a lot of commentary from the FMCG companies that there's some sort of slowdown that is happening. So just wanted to get a sense from your side. I mean, since you're saying that the credit demand is picking up, how is the business environment that is there in the macro, in the rural India?
On the rural areas, we are mainly in the unbanked rural areas, and that is our licensing condition also, where 25% of our branches need to be in unbanked rural areas. We are not seeing a slowdown there. We are seeing that the credit demand is equally high, and things are going on well there. We are in fact opening branches in these unbanked rural areas here again. On the semi-urban side also, as of now, we do not see any we are going strong in those areas too.
Okay. And when we guide this growth rate of 30%, So is it the entire industry is going to grow at that rate, or is it Ujjivan who is going to take the market share? And will it be from the organized player or from the unorganized to organized? That sort of migration are we expecting?
I think that 30% is a reasonable level. As far as I don't know about the full industry, but the small finance banks which are active in the micro banking area, as indication in a recent seminar which was held a couple of days ago, 30-35% seems to be a rate which is doable. So for the SFBs who are operating in the micro banking area, but MFIs, I don't have any figure on that.
Okay. So when we say SSB is growing at 30%, so just wanted to understand from where is the demand being generated? Because you have the GDP which is growing at 10-11% at the best. Then how is the 30% growth coming in? Is it that the unorganized segment is too large and some demand is coming out from there?
The one thing you have to keep in mind is that last year was a very slow year because there was COVID. From that base, when you say 30%, it looks reasonable. So I think we're not. When industry gets back to a normal run, then 30% may be a number which looks ambitious if the environment is not strong. But in a condition where you're coming from a low, some people, degrowth to some extent, 30% in this recovery year looks reasonable.
Okay, and if everything remaining stable, what kind of growth can we see over the next 5 years or so? Just a ballpark guess.
That's too futuristic to comment, Harsh.
No, just if there are no hiccups, no major headwinds.
Harsh. No, but the industry has had a good, if you look back at a period when there was no constraints, the industry has done very well. If you look at the 2014, 18, 19 period before demonetization, it was okay.
I get it. Thank you. Thanks a lot.
Thank you. The next question is from the line of Ashlesh Sonje from Kotak Securities. Please go ahead.
Hi team, good evening. Just one question from my side. I want to assess the non-NPA provision buffer that we are carrying. So of course there is a floating provision of 220.
Sorry to interrupt, Mr. Ashlesh. Your audio is sounding very soft.
Yeah, sorry. I hope this is better.
Much better, thank you.
Yeah. So wanted to get an assessment of the ex-NPA provision buffer that we are carrying. There is of course a 220 crore floating provision, but outside of that, what are the standard asset provisions and the restructured asset provisions outside of NPA?
Yeah, Ashlesh, just a sec. So the total provision that we have on the book is 1290 crore. Of that 1290 crore, 909 is my NPA provision and 250 crore is my floating provision, and the balance is my standard asset provision. Roughly 131 crore would be my standard asset provision.
Okay, and the restructured provision would be part of the standard asset, is that right?
Yeah, it is part of the NPA provision. As I had said, that we are carrying 100% provision on both RF1 and RF2 book, which has turned into NPA. So that is part of the 909 which Deepak mentioned.
Okay, very useful. Thank you. That's all.
There is a small portion of the restructured provision which is there in the standard asset provision. Not very big portion, but a very small portion.
Yeah, understood. Thanks.
Thank you. The next question is from the line of Vikram Subramanian from Spark Capital. Please go ahead.
Am I audible? Hello? Am I audible?
Yeah, Vikram, you're audible.
Yeah, hi. Congrats on a good set of numbers. So,
thanks, Vikram. Vikram, can you be a little louder?
Yeah, is this better?
Yeah.
I just wanted to get some clarity on the equity raise that you had mentioned. So, I know it was an enabling resolution. But this equity raise would be completely towards meeting the MPS requirement, right? So do we at least have a number of shares locked in terms of how much we would be raising?
No, we don't have any number of shares locked in that we'll be raising so and so number of shares. It is, but your understanding is correct that the reason for doing this equity raise right now is for meeting MPS requirement. However, I will also add that given the kind of growth that we are expecting, it's always better to have a little extra capital, and thus we are looking for this equity raise, and like Ramesh mentioned, we might also look to supplement with a little bit of sub-debt if required.
Oh, okay, got it. And I think you had mentioned...
Nothing concrete right now, so won't be able to give quantum and timeline for either of those things.
Got it. And I think you had mentioned something like December to be a deadline by which we might do the equity raise.
Yeah, that's the 3-year time period that we have from SEBI because we got listed in December 2019, and within 3 years you need to meet the MPS requirement. So our 3 years ends on 11th of December 2022. So as per the regulatory requirement, we need to finish this equity raise by that time. And we are hopeful we'll be able to meet the regulatory requirement.
Okay, got it. Thanks. That's it from my side.
Thank you.
Thank you. The next question is from the line of Eric Chan from Bona Vista Fund Management. Please go ahead.
Good afternoon, management. Congratulations on a strong set of results. I have 2 questions. The first question is on the strong disbursement in 1Q. Can you talk about what did you do? How did you adjust your process to take care of the RBI harmonization requirements for income and liability check for household in microfinance?
Eric, actually, Vibhas actually mentioned a couple of questions back that we have been following all the norms required by RBI under the new requirement, and thus we did not have to tweak our processes to comply with that. And thus we were able to do the disbursement in line with whatever we have been doing so far.
And Eric, the other thing is that we have been disbursing over 4,800 crores in the previous 2 quarters. So, this pace is now sustainable.
Sorry, I was under the impression that the RBI 3 lakh household income check and the 50% maximum servicing ratio was a new requirement that came out in March this year.
Yeah, the requirement is new, but Ujjivan as a process has been following it for a very long time. So as per our process, it's in line. For the industry, it is new, and thus a lot of other players will have to make arrangements or changes in their process to comply with the requirement. And like Vibhas also mentioned, RBI has recently announced that the regulations are implemented with an effective date of 1st of October.
Got it. Second question is, can you talk a bit about your PSL certificates? We heard that RBI has been tightening their audit checks and now require for some of the MFI loans to have various paperwork and support proof. For example, agri loans require proof of either land ownership or land lease contracts. I want to just check whether you have been seeing some of that challenges and how has that impact your PSLC eligibility?
Yeah, thank you for your question. As far as PSL is concerned, we have been following RBI policy around that in letter and spirit, both in microfinance and other books also, including housing and MSC and whatever other business we do. We don't see any challenge in that. We have robust process and mechanism to qualify our loans into different PSL categories. So we have also heard what you are telling in the market, but at the same time, we are confident that whatever we are ways and process we have to qualify loans into different categories is something which in line with RBI requirements.
Great. Thank you. I have no further questions.
Thank you. The next question is from the line of Moin Danawala from Tata Opportunities Fund. Please go ahead.
Thank you, operator. Congratulations on a fantastic set of numbers. I have two questions. Question number one, would you be able to provide us a summary of the overall kind of actual plus estimated losses that we would have seen from the time COVID started to today? And question number two would be if you could give us an update on the merger.
I'll answer on the merger part, and while Ashish frames his answer on the first part, he'll have to do a little bit of digging on the number. So on the merger, the first step is to meet the NPS requirement, and like I mentioned to the previous caller question that we would be meeting the SEBI requirement by December as the timeline is there, and only post that we can take ahead the reverse merger process. In a parallel process which we are seeing, we have not seen that the SFB had any challenge in getting the regulatory approval from RBI or SEBI or exchanges. So that process should not take much of time.
On the overall impact during the year, we had overall slippages in both micro banking as well as the other segments, housing as well as MSE. And on micro banking specifically, because the slippages were higher, we had a overall slippage of in the range of about 1,500 crores. We recovered 700 odd crores from the NPA pool, and we had a write-off of about 780 crores. So the total inventory has actually come down by about 60 crores between March of last year to June 30th of this year. This is what we would say as the first year, that is the last full financial year and the first quarter of this year. In terms of write-offs, I could give you the number. It was about 780 crore that we did in the last financial year. But one more important data I would want to share. Out of the 780 odd crores of write-off, we have actually also recovered 65 crores in the last 4 quarters. So the write-off, as I was saying earlier, is not something that would not come back. We are seeing some signs of recovery from there, and close to 8% of the overall write-off for the year has been recovered already.
That's great news. So would it be right to summarize this as saying that we would have approximately 1,715 crores of write-offs between April 21 to today, and a similar number in the year prior to that?
No, I don't know how did you get a 1,700 crore of write-off. We had roughly 780 crore of write-off last year.
63 this quarter.
Yeah, total 80 crore this quarter, including everything. And prior to that, the write-off amount was very limited. So the write-off amount, if you're looking at, would be roughly 870 odd crore, not more than that. And like Ashish mentioned, out of that 870 odd crore, roughly 70 odd crore has been recovered already.
That's right.
And we expect that recovery should continue as this year proceeds.
That sounds great. Thank you.
Thanks, Moin.
Thank you.
Thank you. The next question is from the line of Vijay Karpe from Shriram Life. Please go ahead.
Thank you for giving me this opportunity. And
sorry to interrupt, Mr. Karpe, we are not able to hear you clearly.
Just hold. Just hold on.
Yes, Vijay.
Am I audible now?
Yes, much better.
Much better, no? Yeah. So thank you for the opportunity and congratulations on a good set of numbers. I had 2 questions. One was if you could talk about your top state, which is Tamil Nadu, and also if you could talk about Uttar Pradesh and Bihar in terms of business environment there, and also in terms of disbursements, AUM growth and collections.
Sorry, Vijay, we didn't get the first part of the question.
Yeah, so my question was, how has been the business environment in the state of Tamil Nadu, Bihar and UP, and also how has been the disbursements, AUM growth and collections there?
Yeah, I think you are coming from the point that these states are rated in terms of OSP, and these are for second and third state in terms of OSP or fourth. Top 5 they belong to. I think Tamil Nadu and we are in top 3 in terms of OSP as far as the market is concerned. We always had a policy that we don't grow to a certain beyond certain extent in any state, and that is why we have grown business in almost everywhere in the country. And these states also have that limit. We don't grow beyond certain limit. We don't grow beyond 10 to 15% of our OSP is not residing in any particular state. As far as business environment is concerned, as we mentioned earlier that most of the branches are urban and semi-urban focused, as it was microfinance branches converted into banks, and we don't see any particular challenge in terms of credit quality or political risk in these states, Tamil Nadu, West Bengal, Bihar and UP. In terms of portfolio quality also, all these states are in line with or little better than our overall portfolio quality at Pan-India level.
Great. And how has been the collection efficiencies in these 3 states?
So as I mentioned that I don't have exact number, but all these states are performing like the overall Pan-India performance, if not better. Especially Bihar and UP is much little better than our national average. Tamil Nadu is in line with our national average. So there is no much difference.
Got it. And the last question from my side. In December, the dilution which we are doing, will that be a fresh issue or will it be also an OSS?
It will be completely fresh issue.
Okay. Great. Thank you so much and best of luck.
Thank you, Vijay.
Thank you. The next question is from the line of Akash Jain from Money Curves. Please go ahead.
Yeah, am I audible, sir?
Yes, you are.
Yeah, so first of all, I think huge congratulations for the team. I think excellent set of numbers. I think we are very quick to criticize management when numbers are bad. And I think we should be equally open to congratulating them when numbers are good. So huge congratulations. So I have just 2 clarifications. One is when you say 80% collection efficiency on the restructured book. So is it on that month's EMI or is it on the whole base where old past EMIs are also being considered?
It is on that month EMI, Akash.
So so in that case, there would be slippages coming from the restructured book into GNPA on a monthly basis, right? So that is how. So there will be some slippage from restructured book on a monthly basis on the NPA book, and then there will be some recoveries potentially from the GNPA book. That's the way this whole thing will work, right?
Understanding. Correct. Yes, Akash.
Okay. So,
and one point I would want to make here is our, the SMA book, SMA 0, 1 and 2 on the restructured book is in single digits. So even if there is any slippage, it's a very minor, small number.
No, but when there is 80% collection efficiency, then theoretically 20% of the book is the non-provided book is going into GNPA every quarter, right?
So let me put it this way. So the 80% collection efficiency is a blend of non-delinquent and the NPA. If I were to look at the collection efficiency on the NPA, that would be in the range of 30%, and the collection efficiency on the non-delinquent and the SMA book would be in the range of 98-99%.
Ladies and gentlemen, the line for the management has got disconnected. Please stay connected while we reconnect the management. Ladies and gentlemen, thank you for patiently holding. We now have the line for the management reconnected. Over to you, sir.
So Akash, as I was saying, the collection efficiency of 80% on the restructured book is a blend of non-delinquent as well as NPA collection. And out of the 360 odd crores of restructured RF2 book, we have 148 crores already in NPA. That is giving a 30% collection efficiency. The non-delinquent book is giving more than 96-97% collection efficiency. So the overall average comes to about 80%.
Okay. So because we have already provided for practically the whole restructured NPA part, we do not see too much slippages coming from the non-NPA book because there the collection efficiency is broadly in line with the overall book as well.
That's right. So in fact, as I was saying, our SMA book, SMA 012 is in single digits. It's a very small number.
And on the NPA book, I think earlier you guys had mentioned that 30% of the customers are giving every month EMIs. But if I just broadly want to understand what is the collection efficiency of the GNPA book, including restructured book GNPA as well as the overall book GNPA, what will that collection efficiency number look like?
Akash, let me put it like this. The entire book that we have, NDA or PAR or GNPA or restructured, everything put together, collection efficiency is 99%. So whatever NPA also or restructured also is there is very limited scope where the payment is not coming. Rest, the overall collection is 99%.
So if I want to just clarify one thing here. So when we talk about 99% collection efficiency on our slide, I think 21, it basically means all the customers where which are 0 to 90 and even more than 90 which have not been fully provided for. Is that the base that we have to take into account?
Everything that was due for that month is counted. So if you look at the June number on that slide 21, if that 1,121 includes every money that is due in the month of June.
Okay.
For the month of June.
I got it. Now, one last question here, sir. So, unfortunately, with the way the RBI regulation is that once a customer goes into delinquency, even if he is paid one or two past EMIs, he still remains in as a delinquent customer. If I once forget or ignore the RBI requirement and just want to understand how many of the actual book, not from an RBI norm perspective, how much of the actual book is actually 90 days? Is that number significantly different from the 5.9% we have as per RBI norms?
No, it will not be very different. See, when customers miss 2 or 3 EMIs and they start touching 91 or 121 DPD, they could actually pay 1 or 2 EMIs and come back to 61 or maybe 31. But they still continue to be tagged as NPA customers because till the time, as you said, the arrears are completely repaid, we will not be upgrading any of these to standard assets. So therefore, the quantum of customers who are in 30 or 60 DPD is a small number. I would say it is not more than 40 to 50 crores.
The overall SMA book itself is very
SMA book itself is 1%. I would say this is a fraction of that, maybe 0.2, 0.3%, which is NPA, but with maybe 2 EMIs pending.
Okay. So most of the customers are barely able to pay, even on the NPA book, they are barely able to meet that EMI requirement for that month, and hopefully over a period of time they will be able to pay. But asking them to pay more than one EMI is a difficult scenario for an MFI customer.
Yeah, because also, Akash, there would be customers in NPA who have more than 3 EMI payable.
Okay, got it. Thank you so much. That's very useful. Thank you so much.
Thank you.
Thank you.
Thank you. We'll move on to the next question. That is on the line of Jay Mundra from B&K Securities. Please go ahead.
Thanks for the opportunity. Sorry for...
Hi, Jay. Jay, can you be a little louder, please?
Yes, sir. Hi. Is it better, sir?
A little better, yeah.
Sure. So apologies, sir, if this question has been answered earlier. I wanted to check what is the total stock of provisions in the balance sheet, which is specific plus floating plus restructured. Is this what you have given on slide 23?
So, Jay, the total provision on the book is 1290.
Right.
Of that 1290, 131 is standard asset provision. 909 is my NPA provision, specific NPA provision, and 250 crore is my floating provision. So out of that 250 crore of floating provision, 220 crore is being counted for my PCR calculation and 30 crore is being used for my tier 2 capital.
Right. Total is 1290.
1290. If you see slide 23, on the bottom of the slide 23, we have mentioned that 1290.
Sure. And second question is, sir, on one of your peer banks had shown that RBI in their inspection had called out for people who have taken MFI loan, but they did not qualify for PSL because of, let's say, inconsistent land record, etc. Is that, I wanted to check if, you would have faced similar problem, or could that be a potential sort of a risk?
So we have not had any such observation from RBI. What I understand, in one of the recent peer bank call, there was a discussion regarding agri book being classified as PSL, and there needed some bit of documentation and all. So there, and this question was also discussed and Vibhas clarified. So the requirement came in September 20 onwards, and we have all the documentation required wherever it is required. And also there's a RBI point where the documentation is required or for agri allied only if the ticket size is above 2 lakh. For us, the ticket sizes are not there. So for that category, for SMF category, we would not require that documentation.
Understood. And last question, sir, just wanted to clarify, the RBI new recent guidelines on MFI lending, which ask you to calculate the household saving, etc. This clearly does not seem to have any impact, right? Because your disbursement have been fairly good. But just wanted to double check that does this new regulation had any business impact, if at all?
Yeah. So as I mentioned earlier that household income or household liability, etc. This is something which we are in practice in Ujjivan for last 10 years. So that is something we are already doing. So we didn't have to stop for that. There are certain changes for which RBI allowed time till 1st of October, on which we and other partners, trade bureau, etc. are working, and we'll meet the requirement on timeline. But yeah, from as far as income and liability calculation is concerned, this was already in place before the RBI came up with the requirement, the policy.
Sure. That's very helpful, sir. Thank you so much.
Thank you. Thank you very much.
Thank you. Ladies and gentlemen, we'll be taking the last question. That is from the line of Sameer Bhise from JM Financial. Please go ahead. Sameer, your line is in the talk mode. Please go ahead.
Hello.
Hi, Sameer.
Yeah, hi. Thanks for the opportunity and a strong quarter for Ujjivan. Just wanted to get a sense on the provisioning policy. Would it be more prudent to create some buffer, given that we've kind of had significant stress in the past? We are probably heading into very good times in terms of growth and profitability. So just wanted to get management's thoughts there. Right now, I think the floating provision buffer is around 250 crores. Would it be more prudent to create some more buffer before, just to kind of shield off some of the unforeseen events in the future?
Yeah, I think at the moment, you're right. We have the 250 crores. That is sufficient for the time being. We are coming out of a crisis. But in the future, we will look at the model again and see what we have learned from the COVID situation. And if required, we'll set aside, if our model is to be continuing to focus substantially on the micro banking, we will look at the risk factors from that perspective and set it up accordingly. It is something that we plan to discuss at our board level.
Okay, but it's on agenda. But so far, I think nothing is finalized. Is that a fair assessment?
And right now we are continuing with the guidelines which we had from before, which I think is also quite prudent because it takes care of all the risks at the present time. But whether we need to prepare for another COVID situation, that is something that we can look at later on.
Okay. Thank you and all the best.
Thank you.
Thank you. Ladies and gentlemen, that was our last question. I now hand the conference over to the management for their closing comments.
Yeah, thank you very much. I appreciate all the questions that we received and the interest shown by the participants. I appreciate the support provided by IIFL. So thank you very much.
Thank you. Ladies and gentlemen, on behalf of IIFL Securities Limited, that concludes this conference call. We thank you for joining us, and you may now disconnect your lines. Thank you.
Thank you.